Podcast. Today's guest is Selena Jones, a trusted mortgage advisor with TBF Mortgage right here in Louisville, Kentucky. With years of experience helping clients navigate the home loan process, Selena is known for her clear guidance, local expertise, and commitment to helping buyers feel confident and informed every step of the way. Hello, Selena.
Hi, thank you. That was such a lovely opening.
Yeah, I worked hard on that one.
Thank you. I appreciate it.
How are you doing?
I'm really well.
Good. Having a good week?
I've had a fantastic week, actually.
It's good energy to bring. Yes.
I'm super excited.
Awesome. Well, it's been a mix of too warm and then too much rain as well.
The rain, it was brutal last night.
Yeah, I mean, every 10 minutes, my phone was going off with a new flood warning, flood warning.
Yeah.
It was, not fun.
And my car rides super low to the ground, and I was driving home in it last night, and I was literally like, I might float away. I don't know. We'll see.
Just get an oar out the back and just go paddling along. You'll be fine. Yeah.
Yeah.
Well, I want to start this off a little bit about you, your background, and just give us a quick insight.
Okay. Well, so about me, I've been in the mortgage industry for about 14 years. So it sounds like a really long time. It doesn't feel like that long, but then again, it kind of does. I don't know. But I love it. I have had so many great experiences getting to help people buy homes, getting to help people change their lives a lot of times, which is awesome. So I really enjoy, what I do. I enjoy helping people. I'm a mom of 3, so I've got 3 kids, and they're all getting super big, which is crazy to me, and doing their own thing and starting their own lives, which is awesome. And I've been married for 24 years.
Wow, so 25, a big one that's coming along.
It's coming up. We're going to try to plan something because we're not very good about that, but we're going to try to plan something for 25.
Well, I know how busy you get, so I'm not surprised that, it just kind of that's coming up.
Yeah, we're trying to plan. We're about a year from the 25th. So,
okay, so you got time.
Yeah,
to
we're
plan
trying to.
it.
He's working on it. Yeah.
Good. And are you local to Louisville then?
I'm actually from Lexington originally. Yeah, I grew up in that area, central Kentucky. We moved here after college and have pretty much been here ever since. We had a brief hiatus where we moved to Ohio, and then we moved back because we really like Louisville. I mean, it's really become our home. I really can't imagine being anywhere else now.
Yeah, I feel the same way as well.
Yeah.
How did you get into the mortgage industry? Was it straight out of college, or what was that path look like?
No, so straight out of college, I went to school for public relations and marketing, and I did marketing for nonprofit agencies for a while. That was kind of my track that I came into right after college, and I loved it. It really did feed my soul, and I think that's kind of where I get my heart for helping people in the mortgage industry, is because I started helping people in the nonprofit industry. So I did that for quite a few years, and then after a while, I had all 3 kids in school, and I was kind of looking for something that was a little bit more profitable than the nonprofit world. So a friend of mine was in the mortgage industry and talked to me about coming into this business. And I thought to myself, oh my God, that sounds horrible, because every time I had ever gotten a mortgage, it was not a great experience. And it didn't seem like something I would want to do on a daily basis. But I kind of just always came at it with a different viewpoint of, well, let's see how we can make it better. Let's see how we can make it not that experience that I had, and try to make it an experience that people get to the closing table and they feel good about it. I think of it as like going to the doctor. Like, nobody really loves going to the doctor. Nobody really loves getting a mortgage. But if we can get you to the closing table and you're like, okay, that was good. I'm here. I'm happy. I feel good about, what I got with my mortgage. I feel good about the terms and all those things. I feel like I understood what was happening, which I think is super important, because I feel like a lot of people don't really get explained everything, and they might be a little intimidated to ask, and, all those things. So I try to make sure that, my people feel comfortable with everything that's happening, and they know what to anticipate for next steps and all those things. So yeah, that's how I got into the mortgage industry. I didn't know if it would stick, but my first couple of years, I kind of just took the mindset that I don't know if this business is for me, but I'm going to go super hard, and I'm going to leave nothing undone. I'm going to go to every single thing I can go to. I'm going to meet every single person I can, talk to everyone I can. And at the end of the first, maybe 1 or 2 years down the road, I'll look back and I can say I did everything. So if it didn't work, I at least did everything I could possibly do to make it work. So, but at the end of the first couple of years, I was like, okay, I guess this is working. So I'm still here. I'm still doing it.
Nice,
So.
and we're glad you are. So that's great. And what was it when you worked for the nonprofits? Was it like you worked for multiple different ones, or did you have was it a few?
It was a few. One of the ones I worked for the longest was the Society of St. Vincent de Paul in downtown Louisville. At the time, they had 6 homeless shelters and an open-hand kitchen that served hundreds of people every single day with free meals. So again, I was, working with the homeless, and now I'm kind of helping people get into homes. So I feel like there's something called to me about the home. But yeah, I worked with that organization for the longest period, and then I kind of bounced and did some other like freelance things for some other churches and nonprofit industries. So yeah, that was the one I worked for a while.
Awesome. Well, now transition to TBF. Would love to hear a background about them.
Yeah.
Why you went with them, and maybe what sets them apart than other lenders out there.
Sure. Yeah. So TBF Mortgage, we established this company 6 years ago. We had all at the time worked with Century Mortgage, which was a fantastic company that was very established in the Kentucky and southern Indiana area. And that company sold to another company. And at that time, a group of us kind of got together and left, and the company TBF Mortgage was founded. So we're a little bit different because we are a mortgage broker. So we broker through over 25 different lending institutions. So I've got all these great options, but I'm still here local. So the buyers are going to, work with me. I'm going to be, I kind of think of myself like a little bit of like a concierge in the mortgage, experience, I guess, because I'm going to be the one that guides them through every step. I'm going to be the one, no matter which lender I'm brokering through, they're only going to deal with me. I'm going to be the go-between between that lender and between the appraiser and between the underwriter and all these things. So, they just have to be comfortable with me. We have that, mutual trust so that we can get them to the closing table. So, like I said, we broker, we're local, and we just really pride ourselves on, loving on our people. I really want my people to feel cared for and nurtured in the process of getting a mortgage, and to also feel like they got a really great deal. We shop from over 25 different lenders that we have so that they don't have to go online and try to figure out, well, this one is, got a higher APR than this one. And what does this mean? And these terms are a little different. All those things, are super confusing, and they don't dumb it down for you. They make sure it's confusing when you're going online. So, that's again what I'm here for. I really will, try to lay everything out for them so they clearly understand all the pros and cons of all the different options that are available. And, I try to make it so that they can, clearly understand what is their needs and wants and important things about the mortgage that matters to them. Because when anybody's getting a mortgage, there's different things that are most important to them, whether it be interest rate, down payment amount, closing cost, whether or not they pay PMI. There's all these different things that matter to every single person who gets a mortgage. So I try to kind of tailor what their mortgage is to what, are the things that are important to them in the experience.
And I've definitely seen that working with you, and people really need to understand how beneficial it is to have a local lender, someone that you can actually go to their office and see, which I know you've met with people in person. We've spoken about you love meeting with people, but you can't as much these days just because of how the business is. It's more on phone calls. But
yeah, we do a lot. We try to have as much electronically as we possibly can, because a lot of people want to do it that way. A lot of people want to, email me, text me, upload everything, want to do everything electronically. And then I have some clients who want to come into the office, that want to sit across the table from me, because that's how they feel like they're getting, they can trust me and getting the best experience. And I'm totally fine with that too. So I'm flexible for whatever works for the client and what makes them feel most comfortable in the process.
Yeah, and that goes a long way of just meeting people at where they're at, because there's a lot of companies out there, not naming any, but it's like essentially working with a robot. You just never know who you're going to speak to. You're always being passed from one person to another. Where working with you, it's just, no, you're working with Selena.
And I tell you what, I think about all the time. I think about when I'm getting to the closing with some of my clients, like these online lenders, they're going to sleep fine at night if this loan does not close. And whereas like, I'm going to be distraught if I want to make sure this client is taken care of. I have a relationship with you who maybe sent me this referral, and now I've built a relationship with this client, and it matters to me, and that person, up in Michigan who's working in their basement to get you a mortgage with some online lender, they don't really care. I mean, they're going to go on about their day and their life, whether or not it closes. So to have somebody really in your corner who cares, that in this process, it's, so valuable.
It is. And it's also not just getting them having the issue at the closing table that I know that you will tell them up front if they're not in a position where they can buy a house, you'll let them know rather than saying, oh, we can do it and then finding an issue just before closing. Because I've heard of horror stories like that, but I know you're going to be like, you're not quite ready yet. Here's what you can do to get yourself prepared for that, which leads us into the great next section of if you're a buyer getting ready to do, what's the first thing you need to do if you're looking to buy a home?
So if you're looking to buy a home within the next 12 months, the first thing you need to do is call me, because we've got to see where you're at. Again, I always kind of relate it back to like doctor medicine. Like I like to get a full scan workup of your, of where you're at as far as like what your credit looks like, what your income looks like, what your savings looks like, all of those things, so that I can really analyze what your goals are, what price point you want to buy in, where do you want your mortgage payment, and I can help you figure out a way to get there. And I always tell people, it's never a no. Like, don't be scared. Some people get scared to call because they're afraid of what they're going to hear. And I get it, but it's never a no. It's always a not right now, because there is always a way. I mean, it might take some time. It might take working on your credit. It might take saving up some more money, whatever the case may be. But I can always figure out a way and a process to get you there. And, I will give you that, plan, and then I'll pretty much like bounce the ball over to you, and now it's your turn. You got to go do the things, that we need you to do. If it's saving money or working on credit or getting in a different job that pays you differently or whatever the case may be, I will, cut you straight on, this is what I would recommend, XYZ. I've been in this business a long time, and so I've been through a lot of transactions. So I've seen a lot of different scenarios. So that is such a, asset to me when it comes to how to guide you on what to do, because I've probably seen something kind of similar along the way. Although it always does seem like we're seeing new. That's a new one all the time.
I feel like I've put you through those ones a few times.
But it's learning experience. But I'm always willing to figure out a way to get you there.
Yeah, and I've seen that, and it does make it's very, very beneficial for the buyers to have someone who's like, not just a black and white computer says no. It's how do we figure this out? How do we find the solution to this problem, which I love. And going through that process with you, how does it affect the credit on that? Like what does it do to get pre-approved, or to even just have a look at their background? What does it do to their credit?
Yeah. So a mortgage inquiry is a little bit different than like if you were to go and apply for a car loan or something. The impact to your score is, there's going to be a hard inquiry onto your credit. So it's going to have some impact, but typically for a mortgage inquiry, it's not going to affect your score more than, anywhere from like 5 to 10 points max. And that's even maybe pushing it. Usually it's more like 2 to 3 points. We can do a soft pull. The only thing I caution people with soft pull is that sometimes soft pulls don't give us the full gamut of information. So it can give me a pretty good indication of where you're at, and a soft pull won't affect your score at all. But to actually give you a full pre-approval so you can put an offer on a house, I really have to have a full inquiry. Just to do our due diligence, because I don't want you to go put an offer on a house and then we do the full inquiry and it's like, oh my gosh, something new popped up that didn't show on the soft pull. That's going to be a big issue. So I want to make sure before you put any offers on, we've done our due diligence to make sure everything is accurate. But if we're working on a plan, if we're further out and we want to just maybe do a soft pull to kind of gauge some things, I'm flexible. We can kind of figure out what the best route is for, your situation.
Okay. And if someone's already spoken to a different lender and wanted to get pre-approved, but they're like, I want to go and, make sure I speak to someone else, and they come to you, is it going to affect them twice? They're going to get hit twice on that?
I love this question. No, it's not. So you actually get a window. It's such a misconception that people are like, oh, I don't want to have my credit pulled again because it's going to ding me again. So when you're shopping for a home loan, they do set it up so that consumers can comparison shop, because they don't want a consumer to be put in a position where it's going to do them harm to be able to look at, other options for themselves. That's not doing a consumer any justice. So once you have your first credit inquiry, they flag it as a mortgage related inquiry. And then other inquiries that are made, I always encourage people try to do them within about 2 weeks just to make sure you're in that window. Technically, I think you have a little bit longer, but I like to keep it a little safer. But if you spend like the next 2 weeks or so, maybe talking to some other lenders, if they look at your credit again, it should not continue to ding your score. You should really only have that first ding that would make any impact on your score, because they're all going to be coming in as flagged as they're all mortgage related. So it's not multiple lines of credit that you're opening. You're still only inquiring about one line of credit.
It's just like an umbrella under one.
Right.
Got it. And that's definitely important for people to know, because they want to make sure they're getting the best, right? Want to make sure they're working with the person who they should be working with. And that's I know I've heard of some people who, like you said, think it's something else with that. And then on credits, what scores do people need to have? Like, what's a minimum? What's the ideal? How?
Yeah, that's a good question too. So technically, I can potentially go down as low as 550, or maybe even a no score. So like say somebody has no credit established. I do have, so being a broker and having so many different lenders, I do have options where some of the lenders I work with will take on a little bit more risk and do a no score or do a 550. But typically you got to have a little bit more skin in the game if you're going to do a lower score or a no score. So you've got to have, a pretty decent size down payment. So, that kind of outweighs the risk involved with the lower score. If you can get above a 620, we've got many more options with minimal down payments available. If you want to try to get the best interest rate, if you could get it above 740, you're going to continue to be putting yourself in an even better situation when it comes to interest rate and options for loans.
Okay, so it's that trade-off between lower the score, maybe you've got a higher payment, but higher score, and it's just sort of that fluctuating. But obviously people can only work with what they've got at the time, and if they need to buy a house. But it's good for people to know that it's not just it's like, oh, nope, you can't do it because your score's too low. It's, how can we make this work for you?
It's not as cut and dry as a lot of people might assume. And it can be at some lending institutions. They can be very cut and dry with what their rules and regulations are. We have a lot more flexibility because we have so many different lenders we work with that are willing to be a little bit more flexible.
Got it. And when you look at people's credit score and you see their items that are on there, are you able to help them? Like, hey, this could increase your score if you do this?
Oh, yeah. So I've got a really great program that I can run their credit through that gives me some suggestions on little differences that they can make to their credit to help increase their score. And I also, just being in the business so long, can usually just scan it over and give them like, hey, this is what I'm seeing. This is what's drawing your score down. So, I'm not a credit repair person. I'm a mortgage loan originator, but I've just looked at enough credit reports over the years that I understand them, because they can be very intimidating too when you look at our industry credit reports. So I kind of understand what's affecting the score and what's not. I do know some professional credit repair people that do a good job that I can refer people to if that is necessary, if they're in a situation where I feel like they need to go that route. But a lot of times I can just give them some pretty good guidance that's going to put them on the right track they need to be on.
Also, because different items have different weights, don't they? Like different types of financing and loans.
Yeah. There's different especially when you're applying for a mortgage loan. There are certain things that weigh heavier on a mortgage loan credit pull than maybe a car loan credit pull, because that's like shorter term credit. And actually now they're potentially changing a lot of things, because they're some new things that are coming out probably towards the end of this year or early next year, where they may be accepting a different kind of credit report that weighs things even differently than the one we use now. So there could be some changes coming in the mix too that might actually be beneficial for consumers when it comes to credit scoring.
Nice. Well, that'd be good. Yeah. Anything that benefits our clients is always good.
Yes.
Always good. So throughout the time that I've been in real estate, I know you've probably heard this, for a lot of people, maybe they haven't bought a house in a long time, maybe they've never bought a house, and they hear you have to put down 20%.
Yeah. No.
Let's talk about down payments, because I know it's very different these days.
Yeah, it is. Certainly not. There are lots of options out there. I have a really great conventional loan that like a first-time home buyer could do as little as 3% of the sales price for a down payment. And they also have a reduced PMI, so they don't have to pay as much on that mortgage insurance premium and the monthly payment either. So that's a great option. we've got FHA loans, which you can do as little as 3.5% down. A lot of my first-time home buyers do FHA because it is very forgiving on credit scores. So if they're still building their credit, it's more forgiving for that. They're also forgiving on debt-to-income ratio, so they allow a little bit more debt on your debt-to-income ratio. And a lot of my first-time home buyers have student loans and things like that. So that's a great option with a minimal down payment. You also have like USDA loans or VA loans that require no down potentially with those loans. And then there are some down payment assistance options too, and there could potentially be some grants. I closed a loan this week with a lady in New Albany who got a grant from the city of New Albany towards her down payment. So, sometimes there's different options for things like that. All of those things, though, I always caution people with down payment assistance programs or grants, they all have stipulations that you have to meet, criteria that you have to meet. So they're not a one size fits all, but they do exist. So, I can also potentially, when I'm doing your loan application, help you kind of figure out, because I know about all these things. Is there something like that out there that for your scenario could work? And everybody's scenario is different, so it's not always a, one size fits all, but there could potentially be options for zero down too.
That's it. Having options is the main thing right there. It's not just 20%. It's options. It's find out the best situation for you, see what your cash is, see what assets you have, and go from that. And especially with those down payment assistance programs, they also depends on the house, depends on the sellers, because there are, secondary appraisals that you have and a lot more hoops you have to jump through. So
there can be.
Talking through those is definitely key before
pros and cons to all of them, for sure.
Absolutely. And you had mentioned just then about monthly payments and stuff. So in a monthly payment, once someone's in their house, what does a monthly payment include? Because it's not just your payment towards the house. I know there's a lot of different factors.
Sure. So primarily, the bulk of your monthly payment is going to be calculated based on the principal and interest. So that's going to be, the loan amount and the interest rate for however many years are your term. So if it's a 15-year term, 30-year term, they're going to calculate that principal interest amount. You're also going to have your homeowner's insurance premium. So, homeowners is something that just, is getting a little bit more pricey these years. There's been a lot more natural disasters. A lot of people have been getting new roofs. There's been flooding and all these things. When you have those claims being filed, it just brings up the overall price of those things. So, I always tell people, I try to give them an estimate for homeowners insurance, what it would look like in their monthly payment, but that can vary depending on your scenario and the property. The other factor is going to be your property taxes. So property taxes come out annually in Kentucky. They come out twice a year in Indiana. So, all of that's included in your monthly payment, though. And we're going to have it set up on the back end that you just make your monthly payment, but once a year, we're going to pay your insurance for you. And once a year, your taxes in Kentucky, or in Indiana, twice a year, your taxes. So that's all included. If you put less than 20% down, or if you're not in a VA loan, you may have an additional amount in your monthly payment for mortgage insurance. So mortgage insurance is like an extra insurance policy that kind of protects the lender against your ability to pay your mortgage. So if you were to foreclose on that property, the lender could file an insurance claim to possibly, reclaim some of their losses for that. So if you put less than 20% down, technically they consider you riskier. So that's why they have that extra insurance policy on your monthly payment. But once you get to 20% equity in the property, potentially that can be gone. So we can work with you to help you, mitigate that once you get to the point that you've got enough equity in the property.
And if you live in a place with HOA, is that included?
Yeah, so it's going to be paid out separately, but we have to factor that into what your monthly payment is to qualify. So if you're living in a condo, and I was just running numbers for a client this week that was like $100,000 condo, but the HOA was like $500 a month. So that made a huge difference on what her monthly expenses were going to be for that condo. So you would pay that separately than your mortgage, but we have to factor it into what your overall expenses are for that property. So HOA, if you have a condo or if you live in a subdivision that has an HOA, is another factor. Sometimes you're going to have flood insurance. We can include that in your monthly payment. So you'll have a separate policy for homeowners insurance and a separate policy for flood insurance. And we'll let you know when you're getting that loan if that property is in a flood zone and if it's going to require flood insurance.
And going over all these numbers is crucial for buyers, because I've spoken to some buyers before who they were only told what the sort of house payment was, but didn't include all the other items. So they thought their rate was X amount a month, and then when it actually came to it and they found out it was this huge number, they're like, where did all this come from? And I've been through a process with you that I know you go over all those numbers, which for me, buyers really need to be talking to their lender about those numbers and the full breakdown of what it's going to be.
It's so important. And like, if you look online, it's so misleading, because you can see, here's this property, estimated payments of yada, yada, yada. And I don't even know where they come up with those estimated payments. I mean, sometimes they are so far off. And so I always just tell my clients, if you want to go see a property, text me and say, hey, we're going to see this property tonight. Can you give me an estimate on what my payment would be? Because before you walk in, I want to make sure you're comfortable with that number, because I don't want you to go in and fall in love with it. And then I'm like Debbie Downer who texts you and it's like way more expensive than you're comfortable with.
Right.
So I want to make sure you're comfortable with that. So, sometimes those online estimators and payment estimators are way off. So I understand local taxes. I understand, what insurance premiums look like in this area and all those things. So I can help you get a better estimate of your real payment.
That's important, because it's like those estimates are like the zestimates that you see for a house. It's like, I think as a real estate professionals, we hate online estimators.
Yes.
That's what it is. From different aspects, we just hate it
look
all.
away. Look
yes.
away.
Yeah, that's what we should do. Yeah, go to the professionals that people actually know.
Yes.
And then talking about budgeting as well, when it comes to going through the process and you get to the closing table, you have the closing costs, which not a lot of people really understand what they are, what they account for, and how much they're going to be. Can you break down what the closing costs are? Yeah,
that's a good question. So a lot of misunderstanding about closing costs. On a purchase, so if you're buying a house, you cannot roll your closing costs into the loan. They have to be paid at closing. Now, on a refinance, if you have enough equity in the property, you can roll the closing costs in. So a lot of people get confused. Well, I didn't have to pay closing costs. And well, you do. You have to pay them. Now, you can potentially ask the seller to pay the closing costs in your offer on the property. I always caution my buyers, that's an option, yes, but it could affect whether or not your offer gets accepted, because they may get multiple offers. And if somebody else makes the exact same offer as you on that property, but they don't ask the seller to pay closing costs, they're going to take their offer more than likely. So, you have to, I think it's smart to be prepared to be aggressive if you need to be when it comes to your offer, and be able to pay your own closing costs. And closing costs, I always feel like people are like, well, what are your closing costs? And it's such a misconception, because the majority, like 75% of the closing costs aren't my costs. They're costs from homeowners insurance getting established, property taxes that need to be paid, getting paid at closing. They are the attorney fees, the title company fees, recording fees, the appraisal, all these different things that I don't have any effect on. So there are some lender and origination charges, and the amount of those charges really kind of vary on your scenario. So it really varies on what type of loan you're doing and all those things. But we certainly try, and we have a lot of ways that we can mitigate our fees as much as we possibly can. And also, when we do a refinance, if you come back to me, if I did your loan and we're doing your refinance, then we have a lot more flexibility too to mitigate a lot of our fees on a refi. But yeah, more than half of your closing costs alone are your taxes and insurance. So when we're getting quotes for insurance, I closed a deal today and their insurance premiums were coming in higher than we anticipated. So that affected their closing costs, because you have to pay that first year's premium at closing as a part of your closing costs. So if the premium comes in $1,000 more than we anticipated, oh, wow, that's $1,000 more you got to bring to closing. So those are all things that I can help you and coach you through. And I helped them. We were able to kind of shop their insurance a little bit. We were able to bundle it with their insurance through a different person. And then we were able to get a little bit cheaper. So we were able to make it work. And I can help, mitigate those things and navigate those things too, because I knew how much they had to work with to get to closing.
Yeah, and that's important for people to know, because the last thing you want to do is get to essentially closing day and be like, you need to bring this much and not have that much.
Right. Yeah.
Which
that's
I
a
know
big problem.
you will avoid people getting into that situation.
Yes.
And you mentioned in there refinance. What's your refinance process? Because I know at the moment rates are a little higher than what they were, 2020.
Correct.
And people are saying, I don't know if I want to buy right now because the rates are so high. But I know as a lender, you keep up with the rates. And so what's your process?
Absolutely. So I try to make it as easy on my clients as I can. So once you do a loan with me, you are stuck with me. I tell everybody this, like, I'm not going anywhere and you're going to continue to hear from me. So, once I close a loan with you, I have a great database where I keep all my clients' information and I know what their rate was when they closed, what kind of loan they did. And when we get to a point where we're in a downward moving market when it comes to interest rates, I literally monitor that database every single day. And I have like some auto things that kind of trigger to me too, that like, hey, you might need to call, that we've hit a certain point that you might need to call this person and this person because they could be saving some money. So I always tell my clients, if I haven't called you yet, it's because it's not time yet, because there are some costs associated with doing a refinance. And even though we can roll them into the loan, they're still there. So I want to make sure whatever costs we're spending to do the refinance, your monthly payment savings are gonna be worth it. So I always tell people we got to make sure the juice is worth the squeeze. So whatever there's going to be up front, I like to make sure that monthly payment savings, you're going to recoup that cost within a year to year and a half at least. So that it really makes sense and you're not just kind of churning your loan over and over again, spending money to save money and spending money to save money. I usually like to see that you're getting about a point savings, but sometimes it doesn't always equate because I really look at what the dollar amount is. So when rates start coming down, I'll pull up the file and I'll say, okay, well, this would be their rate today. This would probably be about what their monthly payment is. If they refied, this would be their savings. And then, I'll just reach out and I'll say, hey, just running some preliminary numbers. Looks like you could save, $150 a month if you wanted to refi now. Do you want me to explore this further for you? Or do you want to, pause and see if the market moves a little bit more? I mean, it's kind of like gambling, it's like, do we pull our cards out now or do we hold off? We don't know. But there is no rule on how many times you can refinance. So, potentially if we refied kind of early when rates are starting to soften, and then in another year you wanted to refi again, we could. There are still costs involved. But, if it's your long-term home that you want to be in, it can make sense to do that. I've done that personally, multiple refis on a property to try to get the best situation I can be in. And I'll guide you through that too, and the pros and cons and what makes sense. And I'm a very straight shooter, I'm really here for like long-term relationships with my clients. So I know if they have a good experience with the refi or with the purchase, they're going to tell their friends, they're going to tell their kids, they're going to tell their neighbors, hey, if they're having a conversation about those things, you should call her. She was super helpful. So I really just try to help them in any way I can to make a decision that they're comfortable with. And people will stress out and they'll be like, well, I don't want to make the wrong decision. And I'm like, there's really not a bad choice here. There's just which choice makes you feel the most warm and fuzzy about your loan, about your situation, about your monthly payment. That's what's most important, because there's been plenty of times where clients have made choices in a loan that I thought to myself, I don't know if I would have done that, but it's what made them feel best about their scenario. And I weighed it all out for them. So at the end of the day, it's their loan. And I'll do whatever, is going to make them feel most comfortable.
Right. Because there's some people who $100 a month, it can
It's
go
huge.
a long way, especially with how things are right now.
Yeah. And there was a guy like back in 2020 who refied with me, and he was only saving like, I don't know, it was like $75 a month. And so, and for him, that was a good savings, and he was very frugal. And I remember thinking, I don't know if I would do it if I were him, but he wanted to do it. So I was like, all right, let's go. Yeah. But I remember now he got his rate down to like 2.875 or something. Wow. I mean, crazy low. So now I'm like, yeah, it's probably good that he did that. Cause at the time we knew it was low, but you didn't know that it was like once in a lifetime low. So, he made a good move there. Yeah. He only saved about $75 a month, cause I'd already done his loan and his rate was pretty low, but he wanted to get it as low as he possibly could, and he did. So he's got one of those, really great interest rates.
Nice. Yeah. Wait, so rates aren't going back down to 3%?
I don't know. Yeah. I hope they do.
That'd be great.
I mean, I would be super happy if they do, but I mean, I think realistically, it's probably not healthy for the market for them to be that low. That's probably why we're all paying for it now, because with higher rates. I feel like we need to get back to a good happy medium of probably like 5-ish, maybe high 4s. And I think people would be happy with that. I think most buyers and a lot of people who are maybe not selling because they've got a really low rate would probably be like, it's not as good as what I got, but it's pretty good.
Right,
and they
right.
would be more likely to list and move and all those things. I think that would be enough to move the market a little bit, and motivate some people who've been holding off. But I mean, we've been talking for a couple of years now, like waiting for rates to come down, and they haven't really moved very much. So in that time span over the last couple of years, home prices have only continued to go up. So I definitely don't think it's a good idea to be sitting on the sidelines. If you have a reason to move or a desire to move or a desire to buy, you're renting and whatever, the longer you sit on the sidelines waiting for rates to come down, the more expensive that same house is going to be. And by the time rates come down, that house might be out of your price range that you've been, that you've been looking at. So, I definitely wouldn't recommend waiting because at this point we just don't know. I mean, we don't know when they're going to go down, and we don't know by how much. But I will assure you that if you buy now, when they do go down, we'll fix it. We'll refi it. We'll get that rate down a little bit more, save you some more money. Hopefully it's not a long-term thing, but at this point we just don't know.
Yeah. And there's a way that people can be involved in the market, but not fully. You don't have to be going out looking at every single house,
Right.
but be in a position where you're ready to buy, that if that perfect house does come on the market, you're ready to go. And then, like you said, down the road, refinance and get it to a lower rate.
We can always fix
once
it.
that house sells, it's probably not going to come on the market again for a while.
Exactly. And I know I had a girl who has like a 3% interest rate or something, but the house across the street from her sister went on the market. And she's like, our kids are the same age. They can run to each other's houses. Like, I don't want to let go of my 3% and take a 6.5, but I want to live across the street from my sister, know? So, I mean, sometimes things are more important, when it comes to, what you want in your home. I mean, this is your home. This is where you're raising your kids and your family and living your life. And sometimes you got to weigh the pros and cons. And, even though it's not 2% and 3%, we're still making it work. We still are closing deals all the time, and people are still finding the houses and making it work with their budgets and finding ways to make it work. So I can help coach them through all those things.
And I think that's key to say. Obviously, we're not telling people go and buy any house. Like, if it's within your budget and they can still afford it. So, like, like you said, you can work through them, and if they can afford it, then go,
right. And that's the thing. Like, rent's not getting any cheaper either. It's crazy. I mean, when I look online at what these little tiny houses are renting for, I mean, it's not getting any cheaper to go that route either. So, I mean, if you continue to put yourself in a position where you're renting forever and you're not gaining any equity, when these homes are out here, you're holding on to them for a couple of years and making, significant profit when you sell them. I mean, there's something to be said for that, and how it can change your life and, all those things. But, if you're comfortable with the payment, the rate is what the rate is. But the really thing that matters is, like, can you make that mortgage payment every month? If that's doable for you, try not to like get yourself too upset about that rate number, because like you said, we can fix it. We can refi it later. As long as you can afford that payment. When you're looking at rent, you're only looking at, can I afford that rent payment? So it's kind of the same thing. I just don't want people to get too focused on that interest rate and discourage themselves from being a homeowner, because it's still very, very attainable.
Yeah. Look at the big picture.
Yeah.
Yeah. It's definitely more than that. Then people have got pre-approved. They're going through the process. What are your tips for a buyer to make it a smooth process for them working with their lender and their real estate agent?
So while they're in the, like, buying a home, like they're under contract?
Yes.
Oh gosh. Definitely, like, stay in communication with the two of us every step of the way. If you have any questions, and ask them, and think about anything you're doing, like, as far as, like, financially. So I think that's the most important thing, is when we, do your pre-approval and you fill out your loan application and all the information that's on your loan application, where you work, where you live, if you're married or not, what bills you're currently paying, how much is in your account. If I pre-approve you with all of those things, if you're going to make a change to any of those things, please let me know, because it could affect your eligibility for the loan. I mean, a lot of times people assume, well, I took a different job, but it's a higher paying job. Well, what they didn't know was when they went from a W-2 job to a 1099 job, well, now that's going to mess up whether or not I can get them approved for a loan because they changed the pay structure. So yeah, maybe it's technically more money, but the pay structure is different. So, don't assume that any changes to the application that you've made are okay for your loan. Make sure to ask. I had a deal like 2 weeks ago where, bless her heart, she went out and bought a whole house of furniture for her with credit before our closing, which was in a week, and she literally, I have it in a text. She's literally like, and I know you told me not to do that. I can't believe I just didn't think about it. And I'm just like, oh. So we fixed it. She had to pay off that whole house of furniture she just bought so that we could close because she couldn't qualify with that new payment because her ratios were too tight, So it's just, don't make any changes. Don't open any new credit. Don't quit your job. And like getting married, like somebody's like, oh, well, get in the house. We decided to get married over the weekend. I'm like, oh, okay, congratulations. But now we have to redo a bunch of legal paperwork because, whether or not you're a married or unmarried person affects how the title is held and all these things that people don't always think about that we think about on the back end. So not saying it can't be fixed. I pride myself on being a problem solver. I have to be in this role because there are always new challenges coming up in the loan process. But if you want it to go a lot smoother and easier, we could avoid a lot of those things if you just talk to me before. Right. I wish that girl was at the furniture store. I was like, oh my gosh, if she would have texted me that Sunday afternoon and been like, hey, is it okay if I put this on my credit? So that I could have told her, no, please do not do that. But, she didn't. And I, of course, figured it out a couple days later, and, it was a big problem.
Yeah. She got excited. And at least you found out before it was too late.
We did. Yeah, we monitor those things, and we found out there was some new credit, and, we were able to get it fixed. Didn't even affect when we closed. But, we still had to fix that and deal with that. Mm-hmm. So, yeah.
And that's the thing, people they're going to be in their house for many years. You can wait 30 to 45 days. Right. Just wait. Right. Do what you want afterwards.
Yeah. Once we close, God bless. You go enjoy life, but until we close, just please stick with the plan.
Yeah. Once you close, get the furniture, get the car, get a new job. It's
great.
Up to you.
Yeah, do it all.
Keep making your payments there
as
well.
That would be great too. Yes, please.
Yes, yeah. Mm-hmm. So working in the Louisville area, Southern Indiana area, what do you love about working here?
Yeah. Gosh, I love so much about this area. I think we're so blessed to live in this area. I love everything horse, equine, racing. Love it. Love the horse farms. Grew up in Lexington, so surrounded by horse farms everywhere. Pretty much everybody I went to school with, parents were, everybody worked in the horse industry in Lexington. Grew up at Keeneland, and now living here. I love Churchill Downs, all that. I love the bourbon industry. I feel like there's so much rich history in the bourbon industry. My son turns 21 Monday, and we're going to take him on a bourbon tour.
Wait, hold on. I'm going to pause there. Your son's birthday's when?
Monday.
So that's the same day as my birthday.
No way! I think we talked about that one time.
So,
yeah.
Good day.
It's a good day. Good kid born on that day. So we're taking him on a bourbon tour, which is going to be super cool.
Which one?
I think we're going to Woodford.
Okay.
So there's so much rich history for the state of Kentucky and just like even the nation of like with bourbon. So I love that. I love that Louisville is affordable still to like raise a family, but we've got great restaurants. We've got, culture. We've got shows. We've got, great college basketball in the state of Kentucky, so many cool things. I think it's a great place to live. I think there's lots of opportunity here. That's part of what brought us to Louisville after college was there was so much opportunity, and I wanted to raise my family in a place where when my kids graduated college or high school, and if they moved away, they would want to be here. Like they could move back here and find jobs, and it would be a place that hopefully our families could stay for a really long time.
Yeah, and then there's definitely more opportunity. I feel like it's growing. I feel like after COVID, obviously Louisville took a hit just like everywhere did, but I felt like Louisville was very slow in getting back. But now I feel like it's in a good place that things are really, and there's just lots of new things popping up.
Yeah.
So horses, Churchill Downs. You've got 5-0 Tuesday, Thurby, Oaks, Derby. Which is your favorite?
Oh, gosh, I think Oaks maybe is my favorite. Because the first time I ever went to Churchill Downs, I went to Oaks, and I feel like, it's the Phillies. I love that. I love all the pink.
Can see by the cup.
Yes, by the cup. And I feel like Derby is kind of like a day that like Louisville shares with the world, but Oaks is still more local. Now, 5-0 Tuesday and Thurby is even more like it's straight, mostly locals those days, which I love those days too. And Thurby's and 5-0 Tuesday is great because it's not as busy at the track, but the energy at Oaks and Derby, I went to Derby once, and the energy is amazing. I mean, it was a dream come true to go to Derby, but yeah.
It's very fun. I've been once myself.
You went to Derby?
Yes.
Yeah.
And just the energy is different. It feels different.
Yes.
Especially even though I don't see any, just knowing that there's like celebrities and
Yeah,
famous
I
people
didn't
there.
see any. But we went in 2021, and it was the first Derby after COVID.
Oh, wow.
And it was the best Derby ever because, first of all, they restricted entry, so every other box was empty. So we were like in the 100 section or something, but the boxes next to us were empty, so it wasn't that crowded. It was a beautiful day. I mean, it was like perfect weather.
Which is like unheard of.
Unheard of. 'Cause usually it rains or it's cold. It was perfect Derby weather. And it was the first year they did all food and drink included, and we didn't know. Yeah. So we walked in, and they just start handing us drinks, and we're like, "What's happening? Like they're just giving us drinks? Like this is amazing." So so that was like probably one of my like bucket list like best days of my life was the day I went to Derby. I mean, just all in all, it was beautiful, and we had great seats, and there was hardly anybody. There was no traffic getting out because they were at like half capacity because of COVID was still in restrictions. So it was a great day.
That sounds like a great day, and like definitely the traffic leaving. That is the worst part. When I went, it was terrible.
Yeah,
I've got horror story.
Yeah,
from it.
The feet hurt.
Yes,
getting to the car. Yeah, it's real. Yeah.
Well, in Louisville, what would you say is your favorite restaurant then?
Oh gosh, there's so many good ones.
There is. It's a really tough question.
Like
it's
super
awful.
hard. I do love a couple of them. I love going to local restaurants. And like Bourbon's Bistro is like a staple that like me and my husband will go to. Village Anchor, love the Village Anchor. Another staple that we'll go to. And then like Lemieux. I mean, that's another good one. I mean, I'm showing Kevin Granger some love with a couple of his restaurants there. But yeah, I guess Repeal, which was like amazing. I mean, I've only been there once, but it was so good. Steak and Bourbon. I don't know. Those are all really fancy, yummy ones.
Yeah, there is too many. Like
I know. I mean, I just keep going.
You could pick one area of town and spend a good 5-10 minutes talking about just the restaurants there.
Yeah.
Which is one thing that's great about Louisville. And I do, like you said, love local places. Love how many there are here.
La Bodeguita, Tadima. Okay. Gosh, so good. I mean, that's one of my faves for sure. Fantastic Cuban food. So yeah, many good places.
They've got a lot, and there's a whole host of them doing right now because it's Burger Week. So obviously a lot.
Oh yeah.
Yeah, a lot of them. I've been to 5 places so far.
Have you? Yeah.
I've made
making
a full
the tour.
List. Yeah, today was Bristol Bar and Grill. It was the PB&J burger that they had.
Oh, tell me about that.
It was good.
Yeah?
I was very nervous about that. Of all the ones I was trying this week, that's the one that I was most nervous about. Because peanut butter, I was like, jam as I can get with like, like preserves, like fig preserves. I've had that on food. But the peanut butter, it was nice.
Yeah?
I would have it again. The jalapeno, so I thought the J just stood for like jam, like PB and jelly or jelly.
Oh.
But I think it was more for like jalapeno on it.
Okay, that makes more sense.
It had a bit of a kick to it, but it was really tasty.
Okay.
So for those out there, you should definitely go try that.
Interesting.
Yeah, I would put it on my list.
Bristol's also very good.
It is very good. Yes. Well, Selena, that's all the questions I have for you today.
Awesome.
So a big thank you for you joining. And the only last thing is, how do people get a hold of you or learn more about you and TBF Mortgage?
Yeah. The best way to get a hold of me is my cell phone. So 502-810-4687. I'm like, is that my number? I had to think about it for a second. And then my email is selena@tbfmortgage.com. Those are probably the easiest ways to get a hold of me, but you can also just like Google me, Selena at TBF Mortgage, come right up. So, I'm happy to have any conversations with anybody, even if you're just, wanting to talk it out. That's okay. We don't have to do the whole loan application yet. Even we can do it in stages. If you just kind of want to, talk to somebody, to know, a little bit more questions asked, I'm happy to just go through scenarios with people too.
Awesome. Well, I definitely recommend people reach out to you, and it's a pleasure to work with you. And thank you for all the help you've done for me. I know in my first few years that I got licensed, I wore you out with questions. I always felt bad. Like, Selena.
No, I love that. I love that. I feel useful. I love that. I love helping.
Well, you are great help. Absolutely. So again, thank you for watching. And for all of you people out there, thank you for watching, and look forward for new ones.